Here in this video, we're going to take a look at Tesla stock. We're going to go over the technicals, where Tesla stock is likely to go next. Seems like we're going to break out to the upside. We're going to go over the possibility of that, where Tesla stock could go. What I think is the most likely outcome from here into the start of 2024. Now, Adam Jones with Morgan Stanley has put out a new note for Tesla and for 2024. Some of what he says is very notable, and we're going to be going over a majority of that report to get you guys prepared on what to expect next, or at least what Adam Jones expects next. And I think a lot of you guys resonate with his analysis. He does have a $380 price target currently on Tesla stock. On top of all of that, I think it's worth mentioning today is the first day of the Santa Claus rally, and we are off to a very good start. One of the reasons why I think Tesla stock could actually rally quite a bit this week and into the start of 2024 is just because of the data that we're seeing, the sheer under allocation and the underperformance of fund managers. Well, in 2023, it was a rough year for a lot of them, for a vast majority of them. And there's going to be this big catch-up kind of phase that they're finding themselves in. They need to get allocated to stocks, and probably quickly, as the Fed is pivoting. This can lead to much larger upside gains. But as always, when it comes down to the markets and data, there is things for the bulls and things for the bears. So there's definitely some bearish things we'll get into as well here in this video. We do have some data coming out tomorrow, but the bigger data is going to be on Thursday, even though I don't really expect too much out of this. It could give you a market reaction. So we have a lot to get into. If you can't tell, the work is cut out for us. Hit that like button and subscribe to the channel only if you find value out of this video. Consider joining the trading community as well. If you like my perspective, you like the way we break things down, you want to come firsthand, get access to that information, come maybe make a lot of money. Results are not guaranteed, but we have been killing it over there recently. Check out that link down below in the description of this video. But let's get into all of this information. So the first thing I want to start with is Morgan Stanley's Adam Jonas. He put out a new note today. This article from thestreet.com is largely associating Tesla's 2+% rally today with this new note from Morgan Stanley's Adam Jonas. Adam Jonas says, quote, "Many investors still debate the merits of Tesla as more than an auto company. In our opinion, Tesla is definitely an auto company. It is also an AI company. Other thoughts and events beyond the core auto biz that may be relevant for Tesla in the year ahead. Optimus, Tesla's AI day. First half of 2024 is around when he's expecting this. He says this will be an important catalyst to introduce and develop new adjacencies for Tesla's technologies. Optimus addresses the $30 trillion global labor market and runs on the same software architecture as FSD. Now, who knows? We're probably not going to get pricing speculation. We're probably not going to get unit volume speculation, but the closer we get to that, the closer Wall Street will start to add value to it. Right now, when you're buying Tesla, you're buying FSD, solar and energy. Well, I shouldn't group FSD in that totally. Parts of FSD you're really getting the robotaxi business as a lottery ticket, if you will, at this point. But some parts of FSD are buying the auto business and the energy business. That's what is really behind the valuations that analysts put on Tesla today. FSD, robotaxi, that's not even in the valuation metrics. Dojo, potential software as a service or a data aggregation or providing data to other companies, that's not in the valuation models for Tesla. Optimus is not in the valuation models for Tesla as well. The closer we get to these things being added to the valuation models, the more we can expect appreciation in Tesla stock. Adam Jonas says Dojo, the same forces that have driven AWS to reach 70% of Amazon's total EBIT, can work at Tesla. In our view, opening up new addressable markets that extend well beyond selling vehicles at a fixed price. The catalyst Dojo, Tesla's custom supercomputing effort in the works for the past 5 years. Recent management departures from Tesla's AI team have grabbed headlines. What milestones can show Dojo contributing to Tesla in a positive way in 2024? Edge AI. Next generation software defined vehicles may blur the lines between the automobile and mobile device market. Can a car key do more than just open a door? Can a part of a car stay with you? Tesla's vehicles are robotizing edge computers. Could there be room for a cyber phone at the edge of the edge? EV infrastructure. Tesla's scale in EV puts it in a pole position for industrializing manufacturing standards and supply chain architecture required to commercialize EVs at lower prices while mitigating national security risk. Corpus Christi lithium refining operation should continue to ramp throughout 2024. Last May, Ford adopted Tesla's charging standard with roughly a dozen other rival OEMs following suit. As traditional OEMs pull back on their in-house vertically integrated EV plans, we believe Tesla is in a position to add even greater value to industry rivals in areas such as software/FSD, battery hardware operating systems, and 48-volt electric architecture and other areas. Adam Jonas says the SpaceX/Starlink halo effect. From our discussions with investors about Tesla, the subject of SpaceX and specifically Starlink are seen as important components within the Musk economy and that are potentially interrelated with Tesla itself. Internet of Cars and the supporting compute will rely on a redundant and resilient communications mesh network. Starlink is commercializing an all-new communications network. Quote, why do we remain overweight Tesla despite the safety recall and negative revision risk from a slowing EV market? In our opinion, Tesla is far more than an auto company. Of our $380 price target, our valuation of the core auto business is $88 per share, leaving 77% of our target derived by network services, mobility, third-party battery/FSD licensing, energy, and insurance. We receive significant pushback from our clients for including non-auto revenue streams in our valuation. Our overweight thesis is highly dependent upon these business lines becoming far greater drivers of earnings with clear milestones/proof points backed by accompanying financial disclosure. We believe that Tesla offers compelling long-term free cash flow growth potential. From a full year 2023 base, we forecast Tesla's EPS to grow at 27% compound annual growth rates through 2030, achieving $5 a share in late 2025, $10 a share in late full year 2027, and $15 per share by mid full year 2029. While it's important to factor in near-term/real-time headwinds into full year 2024, we believe it is also important and reasonable to consider the long-term potential of these products and services being commercialized by the company. This is what I think is probably the most insightful thing out of this whole note, and what really had me excited. These kind of two paragraphs right here. Quote, a lower bar. Tesla's operating margins are currently lower than General Motors. While 5% type GAAP operating margins, excluding the credits, are not something many analysts or investors would have predicted. That is precisely what the company just achieved, and it has helped set a low bar for street expectations looking out to full year 2024. This is very important. Now, with a stock generally, you want to look ahead because you're never investing in a stock for what they did do. You're investing in a stock or a company for what they're going to do. You always want to look ahead and say, are expectations high or low? What are the odds Tesla beats or misses expectations? And right now, it seems like one of those moments that Wall Street is just disconnected. Right? Everyone has very low expectations, expecting margins will improve at most 2% next year. I think at minimum, margins will improve 4.5% to 5%. At the highest, they could get back to, some of their higher points that they've ever been, 23, 24, 25% margins. That could be a possibility compared to where we are now at like 17 and some change. That's a possibility that I don't think Wall Street has embraced as a possibility. Now, I wouldn't think that's the base case, but 5%, to margin boost next year. That's very realistic in my personal opinion. And Adam Jonas is basically in the same camp here. He says strong balance sheet and self-funded business model, low risk of equity dilution into a potential hard landing scenario versus other auto and auto-related companies under our coverage. We believe Tesla's fundamentals can prove more resilient in a more challenging economic scenario vis-a-vis, I don't know if I'm saying that wrong, competing OEMs. Tesla ended Q3 2023 with nearly $22 billion of net cash. We expect to see Tesla's competitors significantly pull back on EV investments, ceding higher levels of market share to Tesla, particularly outside of China in the years ahead. We remain overweight on Tesla with a $380 price target and bull and bear case of $550 and $120 respectively. So a brief summary. Dojo, Optimus, licensing of FSD, there are some of those catalysts that may or may not happen in 2024, but they can start to get priced in more to business models fundamentally as rates go lower in 2024. Now, if they come, if we get a licensing deal for FSD, that's going to change the game. That's going to be huge for Tesla stock. He's not exactly saying that's going to happen, but saying we're getting closer to that moment. Now, he also says we have a lower bar heading into 2024. That as long as Tesla, doesn't collapse in 2024, things should go well for Tesla stock. And I think that's really an understatement. I think Wall Street has their estimates way too low for Tesla stock in 2024, but that's the beautiful thing. Because they're going to be wrong. You're going to be right if you watch this channel, at least. I can say with a very high degree of certainty, I'm not going to be wrong in this. Now, I'm not a financial advisor. Do not base your investments on what I say. I could be wrong, but I don't think I'm going to be wrong. I think I'm more confident saying this than ever before. Tesla's going to exceed estimates by a long shot in 2024. Again, I could be wrong, but that's what I'm going to stick by. Now, Adam Jonas also thinks along the same lines as we do here at this channel, that even if we do get a slight recession, something that is kind of low-grade recession, Tesla probably going to be able to do better. The reason for this, which Adam Jonas kind of leaves out, is the average Tesla buyer anyways is middle class, right? Upper middle class area. And if you go into recession, the first jobs that get cut are typically not those ones. The first jobs that get cut, restaurants, manufacturing, just excess areas where there might be too many workers. Restaurant slows down because the economy's challenged. Who gets laid off, right? People that work in the restaurant, right? That's a simple one. Walmart slow down. Who gets laid off? Employees at Walmart. Do your software engineers get laid off? Typically not. Do your, managers of the restaurant, for that matter, get laid off? Typically not. Hopefully you understand what I'm saying. But that really, this recession is not going to be a huge problem for Tesla compared to other automakers. Now, the last point that he points out, I think is very interesting because we all know what direction auto is going in. It's going in EV, it's going in software, it's going in tech, right? We're heading in that direction, getting away from OEMs, internal combustion engines. Now, all these OEMs are pulling back on EV investment. If you really want to invest in EVs, you have one viable choice, and that is Tesla. If you want to go out of the realm of the US, you could also invest in BYD. That would make sense. If you want to go out, I'm personally not. I don't trust China's numbers as far as I could, read them. But that's it. GM, Ford, none of these guys are really trying to compete with Tesla, and they're not going to, especially if they're pulling back investing now. So I think the narrative will also start to change to, if we want to invest in EV, we have to invest in Tesla. And let me tell you right now, forfeiting the next generation of the auto market is not something a lot of Wall Street firms and funds are going to want to do. Even if they don't necessarily like Tesla, I think they somewhat have to be allocated to Tesla, considering, Ford, GM, none of these other guys are trying to even compete. Now, in terms of Tesla stock right now, over this next week, heading into 2024, January, February, you are probably going to see a lot more money going into Tesla. That's because fund managers are massively underperforming. I talked about this in the last video, but I think it's a very important point to highlight because I know some of you guys have positions, whether you're trading options, short-term kind of trades. I think everyone could benefit from hearing this again. According to Tom Lee over at Fundstrat, keep in mind he was the only person that was correct on what the markets would do in 2023. He says year to date, 65% of large cap fund managers are doing worse than the S&P 500. 47% of small cap fund managers are doing worse than the S&P 500. That's a really bad number. 2023 or 2022 was a similar number. So the last 2 years, fund managers have massively underperformed. You cannot afford to do that in 2024. You need to get positioned for 2024 as soon as possible. And I think that can have a powerful near-term impact on Tesla stock and especially your small mid-cap stocks. Really group this into interest rate sensitive names. That's the most clear, concise bet that you could make right now. Stocks that were hurt from the Fed raising rates the last 18 months will benefit from rates going lower over the next 12 months. Simple as that. Now, you factor in degrees of growth, you factor in valuations, you factor in relative safety metrics, and Tesla is the only one that stands out that is top tier of all those categories. Growth, safety, record low Tesla valuations, and it's clear. I mean, where else are you going to put your money in large numbers? I don't know. Let me know down below in the comment section. Now, this chart, to my prior point, suggests that maybe your average stock will outperform the S&P 500 index for potentially multiple years to come. In 2023, your average stock underperformed about 16% compared to the S&P 500 index, meaning if the S&P is up like 21% this year, your average stock was only up like 5% this year. That would be looking at like an equal weighted ETF. So with that being said, the last time you've seen an underperformance this much, 16%, was during the dot-com bust in 1998, 1999, where stocks underperformed about 22% compared to the SPY or S&P 500 itself. This set you up for 5 years of outperformance by your average stock, meaning that this rally in small and mid-cap stocks could outperform the S&P for multiple years to come. Morgan Brennan, by far my favorite host of CNBC, says core PCE deflator's 6-month annualized rate has fallen below the 2% target. New Edge Wealth's Ben Emmons says, quote, it took the Fed just 3 months of holding a restrictive rate in place since July, when the Fed funds rate reached 5.5% and Treasury yields and mortgages hit 15-year highs. The 6-month annualized PCE was cut in half. So yeah, when you look at what stocks have done recently, it's justifiable. It makes a whole lot of sense considering that. PCE was cut in half? Wow. Inflation has fallen a lot faster than people were expecting. Some funds, some people, some investors were expecting inflation might be with us for years to come. But that's just not the reality. Motorhead says, are there any profit tailwinds for Tesla in 2024? I've got a long list of earnings headwinds, but can't think of anything positive. If you don't understand this, tailwinds, it's literally how it sounds. Something pushing a stock higher or just in a good direction. Headwinds are, well, problems. He says, maybe the $7,500 tax credit becoming a point of sale incentive in the US is positive. If you can think of anything else, I'd be most obliged. James Catt, I shared this. That's why I'm bringing this up. If you guys want to come follow us on X, it's Michael Tyler. Go ahead and give it a follow. He says, number one, falling commodity prices will make their way through the supply chain, especially with batteries. Number 2, bigger percent of energy revenue of overall revenue. Energy margin is better than auto margin. Number 3, declining unit cost from higher Berlin/Austin factory utilization. Number 4, declining R&D cost as a percentage of revenue as 4680 ramps. And number 5, declining interest rates will allow price stability at same/lower purchase cost for customers. Something else I want to point out is when Tesla in 2022 was faced with the prospect of rates going much higher than what they expected, what everyone expected, to see, I mean, Elon's not a stupid guy, right? He knew that maybe they're going to be faced with the highest interest rates they've ever faced in their business history. What happens is, to be able to cut prices, Tesla had to become a very lean machine. They had to be fine-tuned to the highest degree possible to be maximizing every dollar spent, to maximize every dollar received. In other words, if you are faced with a crisis, I hope you do everything possible to make ends meet, right? If you have a $500 bill that comes due in 2 days, you better be door dashing, you better be getting groceries for old folks. You better be doing whatever the hell you have to do to make that work. Same thing is true in companies, in businesses, right? Tesla had to do whatever they had to do to get costs down. Well, when things improve, costs still stay low, maybe even continue to go lower, especially if things like battery prices, materials continue to fall as they have been recently. Well, what happens when the environment starts to improve? If Tesla can raise prices, for an example, like they have been doing in China, their margins could explode or balloon a lot faster than some people expect. Banana3 on X says Tesla weekly chart analysis. His target for this chart is 265. He says Tesla is extremely coiled. In his experience, when a stock starts to consolidate closer and closer to long-term downtrending lines, it's because more often than not, it's ready to change that downtrend by breaking out of it. That's something I've been talking about for a while now. If you look at Tesla, especially on a weekly chart, like you're seeing here, I mean, you're already at this weekly resistance line. 1, 2, 3, 4, 5, 6 peaks now for Tesla stock. Odds are you break out to the upside from here. And you can see this if we pull this up as well on the weekly chart. Let's try to take some of these lines out to not make it so messy. You are, I mean, right here. Maybe technically you could pull this line up a little bit more. But I mean, you are right there at this breakout point. If you break out above about 260, the low 260s, you could make an exponentially greater move much higher. So in theory, if we get a break above this downtrending line, this long-term downtrending line, you usually can break out above any near-term resistance or kind of the last 12 months of resistance. That could put Tesla stock easily above 315. That could put Tesla stock, in my opinion, between 340 and 360. So a break above 260, call it 265. You want to see, a break above that, at least a hold above 260, 265 for a couple days to confirm this break. But once you do confirm that break, I'm targeting between 340 and 360. Now, the reason Tesla would likely go into the 300s, likely the mid 300s, is because of all of these factors we're talking about, right? The appealability to put your money in Tesla for 2024, the underperformance money managers have been seeing in their investing, right? They're underperforming the markets by a huge margin for 2 years in a row now. The average fund has underperformed the S&P 500. If they do not get that right in 2024, they're going to start losing a lot of clients, again, to some of these Vanguard, BlackRock products like these ETFs, these low-cost managed ETFs. I mean, if you put your money with a money manager, odds are you're going to be paying a lot more than putting your money in the SPY or the triple Qs, right? So that's another reason why I think Tesla will become a very investable name for 2024. And then you have the obvious ones, right? Like Tesla beating the numbers, the multiple expansion, the multiple different positive catalysts we're expecting in 2024. FSD into China, potential licensing of FSD, the $25,000 vehicle being announced some point in 2024, advances in Optimus and Dojo, potential agreements and licensing of data being provided to other companies. All of these things, Tesla being the only pure EV, really investable investment that you can make in EV right now. I mean, these things are going to be important. On any given day, are they important? Well, maybe not. But the long-term kind of trend, very much intact for Tesla and for 2024. Ryan Dietrich on X says, need another reason to expect higher prices in 2024. The S&P 500 is currently up 8 weeks in a row. After 1 year after previous 8-week win streaks, saw stocks higher 16 out of 18 times. 1 year ago, we noted many recessions. We expected a good 2023, and we still see more positives than negatives. Ryan Dietrich is the chief market strategist at the Carson Group. I mean, then you have some bearish things, right? There's a lot of bearish and bullish indicators out there. But Game of Trade shares one. It is the M2 money supply. It is contracting at the deepest levels since 1960. The M2 money supply is a critical indicator of economic activity. Basically, as the M2 money supply starts to fall, that's showing you contractions, right? And here you can see recessions in gray. Whenever you see the money supply fall, you typically head into a recession. Not every time. 08, that didn't happen. Back here, 2000, I mean, you had seen the money supply contract for multiple years. Overall, it did contract and you entered into a recession. Back here in the 90s, that didn't exactly happen as well. You kind of were going higher on the M2 money supply, then entered a recession. But a lot of recessions, well, do happen as the M2 money supply falls. Seth Golden over here shares with us a very positive indicator that just happened. He says, boom, that just happened. Summonation Index closed above 900 for the first time in at least 6 months. Historically bullish signal. Forward 12-month positivity rate is 94%. Only 2 failed signals, and those were during 2007. Prior to 2023 signals, December 2020 signal led to 26% returns for the S&P 500 in 2021. And here you can see the break above 900. Ryan Dietrich, this is kind of a joke. How bad are things? Stocks at all-time highs, gold at all-time highs, home values at all-time highs. Bonds up 5% for the year after a historic 2-year bear market. Net wealth at all-time highs. Debt relative to incomes nowhere near historic highs. Things appear to be better than most think. Ed Yardini says 12 reasons to remain bullish. Interest rates normalizing down. Consumers have purchasing power. Households are wealthy and liquid. Demand for labor is strong. Onshoring boom is boosting capex spending. Housing is all set for a recovery. Corporate cash flow is at a record high. Inflation is turning out to be transitory after all. The high-tech revolution is boosting productivity. LEI, mostly misleading. Rest of the world's challenges should remain contained. Roaring 2020s should broaden the bull market. So again, to that last point, if the bull market does broaden, well, that's great news for Tesla, considering Tesla is down 40% from all-time highs. With all of these positive tailwind factors, I find no logical bear thesis in Tesla besides some form of recessionary event. I'll tell you though, stocks will sell off before a recession happens. Stocks will sell off when it looks like a recession is coming. I don't know when that happens. It could happen soon, or it might never happen. Without that, though, to be bearish on Tesla stock makes no logical sense to me. Call me a permabull if you want, but make your bearish argument down below in the comment section. All I have is a recession. I mean, sure, could Tesla miss the numbers, miss the estimates? I mean, it's possible, but has that really happened before? Yeah, it's happened before, but most of the time, Tesla beats estimates. When estimates are this low, Tesla has never missed estimates. Tesla's EPS estimates have fallen about 40% for 2024. So for Tesla to miss those numbers seems highly unlikely to me. But hey, we'll have to wait and see. As I mentioned previously, this week is really a record for just no data, but there's not a single company reporting earnings that has analyst estimates this week. That is the first time since 1997 this has happened. So there's just not much the markets are going to be reacting to. But there is some softer data that comes out. Tomorrow at 10 o'clock in the morning, Richmond Fed Manufacturing Index expected at -6, Richmond Fed Manufacturing Shipments expected at -9, and Richmond Fed Services expected at 1. Dallas Fed Services come out at 10:30, expecting -11.5, and Dallas Fed Services revenue expected at -2.3. Now, you're also going to get a 5-year bond auction tomorrow. That's going to be important. 2-year bond auctions, 1 year, 6-month, 3-month bond auctions. That really is dictated by Fed policy. Once you get to like 5, 7, 10 years, then it becomes up for markets' interpretation of where they think yields should be. So the 5-year Treasury auction tomorrow is definitely going to move stocks around, at least somewhat. The last auction we had was 4.42%. Considering 10-year treasuries are 3.88% today, well, that probably means that bond auction is going to come in way, way lower. And that is going to be great news for stocks. Let me know what you think about all of this information down below in the comments section. Drop a like, subscribe to the channel on your way out. If you guys want to come trade with us live in real time, hopefully come kill it over there with us. Remember, discipline and risk management are #1. Check out that link down below in the description of this video. For full disclaimer, none of what was said in this video is financial advice. You may make money or lose all of your money if you join the trading community, so beware about that. It really, I cannot stress the significance of risk management or, discipline, because sometimes you just got to be disciplined. Sometimes you got to put in some risk management. And, what I say is what I do. What you do is what you do. So that's it. Thank you for watching. My name is Michael Tyler. Enjoy the rest of your day and the start of the Santa Claus rally. And I will see you in the next one.